Welcome to today's video technical update presented by CMS Forex. It is Wednesday, December 9th, 2009. I'm Fan Yang, your technical analyst, and I'll go over some developments in the Forex markets. We'll review today's Aussie dollar rally, which was picked up by the VT Traders pattern recognition feature. We'll also monitor the Euro Pound and today's surge by the New Zealand dollar. This video is being prepared at about 5:45 Eastern Time ahead of the Asian session. Here, our first pair is the Aussie dollar pair, Aussie US dollar pair, and this is a pattern breakout that the pattern recognition technology recognized this morning. So here was the breakout and sort of projection area. But now what we do is we have to confirm or invalidate this breakout. So we look at the 4-hour time frame, and we see that it is at this 78.6% area. And there is a breakout, and therefore this is a valid position for this type of signal. You see, this is basically a reversal signal here. Okay, and since this is a very near-term target, we may have to look at the 15-minute time frame. Okay, and here we see, you see here, the break was here in the morning. Let me just okay. So here when it broke, it was still creating a sort of consolidation pattern, and at the moment, you know, here we have to adjust this one, but at the moment the market has appears to have successfully broken, and here was another correction back to test this previous low, and the market has since rallied. Okay, so it's nearing our and this is a viable target here at 0.9150, at least this area. So this projection is still valid in the near time frame, which would be, you know, the rest of the Asian session and part of the European session. We should see the market either move to here, or if it doesn't, it would indicate so by a break of the previous lows here. So if the market comes back down, this is still a viable target if this low holds. All right. Okay, the next pair is the Euro Pound pair, and we'll follow this pair as it completed the Gartley pattern here. So we anticipated some resistance here at 0.9080 area, and indeed there was, you know, this held off as resistance. However, the initial projection was the swing projection. The market is likely at the moment invalidating this this projection. Instead, it's in a triangle pattern here. So what we expect is, at the moment, the market seems to continue in this congestion pattern. So our next test of support will be at the 0.9020 area, and looking at the hourly time frame, we see this. See here, we had a completion of the Gartley. The market did come down, and that was it. And now we have another, you know, basically this is ranging action, and the range, you know, a wide approach to look at the range is like this. However, in the congestion pattern approach, we do see the support rising, and if we ignore this clear out, it would look like this. Okay, with some adjustments here like such, or like such. Okay, so the market may continue to rally, may continue to stay in this range. You see, if we do it this way, the market may come down to the 78.6% area, 0.9020. So, you know, we continue to stalk this pair as it approaches here, and see if we the market will support it, and then see if the market will hold this resistance. Okay, so right now we're in this congestion pattern, and a breakout would indicate short-term price action in that direction. Our final pair is the Kiwi dollar, New Zealand dollar, US dollar pair. And there was a big move today following the Reserve Bank of New Zealand's interest rate statement. And the market pushed the New Zealand dollar up. Here you see that it broke a short-term support here. And the volatility has increased. Now looking at the 4-hour time frame, we see that earlier we followed this retracement pattern and expected another test of this low here, but the market stopped earlier at the 0.7050 area. This is a little bit, I would say, a little bit above the 100% retracement, but it didn't completely touch the previous low. But now the market continues to rally, and we see that in a bigger context, we are almost creating a double bottom. So what we need to see here is the market rally and break this resistance, and preferably also break our declining trend line, and then we would have a bullish indication. However, if the market continues and breaks the 0.70 level, it's really a little bit above that, but psychologically 0.70 is still a strong support level. So if the market breaks below that, then we have a major bearish signal. Here we have a short-term bullish signal because the market, after breaking this, can retest the former top, and until that top is broken, the market is still in ranging mode. Alright, so that's the last pair we have for today. And that wraps it up for today. Make sure to visit fxtimes.com for your latest analysis, live coverage events, and educational resources for the Forex market. Once again, I'm Fan Yang, your technical analyst here at CMS Forex, wishing you good trading.